What up, everybody? Welcome to another class full of gems here at SMC. Ski. Yeah, we're going to talk about last week. Actually, we all going to talk about last week a little bit, but I'm taking us a little farther back. Let's talk about the start of this downtrend, because if you see, this is what ended up happening, right? This is the fully developed picture. And then I'll tell you guys all about my projections, which, by the way, wink, wink, hasn't changed. The projections I gave you since Monday, still my expectations in the market. Nothing has changed. If you see what happened last week, we just consolidated. I haven't changed my stance at all. I don't change my stance until price gives me a reason to, not news, price. You feel me? But I'm gonna get into detail about what I'm really looking for this week, because we got FOMC this week, so it's gonna be pretty eventful. But we'll get back to that. For now, let's take us to the very top. This is replay now on TradingView. Replay takes us back to the top of this trend, and I want to talk about let me see something. Nah, a little farther back than this. All right, look. So that's the weekly. They're showing you what happened ahead of time. Let's go to the daily. This week, it was a holiday week, right? On this specific week right here, it was a holiday week. And the objective or the plan was, yo, if we're going to run all-time highs, we don't want price coming back in here. And one thing that I told you guys about is the fact that this fair value gap existed on the inside of consolidation, which is not really favorable. But like, if price was gonna run to these all-time highs, it can't invalidate at least the halfway mark of this fair value gap. And so fair value gap is a huge part of what we do. I know I get new people every week. Not everybody understands what a fair value gap is, but I've broken it down on my Instagram. I've broken it down in these classes multiple times. So I can't break it down every week, but if you're unfamiliar with those, maybe go to my Instagram. I talk about it a little bit, even like in recent videos, and just definitely check it out. So you stay up to date, because fair value gaps is a major part of what we do, and you'll see why. So this is a daily fair value gap. You can make fair value gaps on any single time frame. I make them on the daily, the weekly, the monthly, the 1 minute, the 5 minute. They're major because price has an objective of balancing out imbalances. So when you notice an imbalance in the market, hence the word or the phrase fair value gap, meaning it's an area where there's a gap in fairness. It's imbalanced to one side. In this case, it's imbalanced to the buy side, meaning it's imbalanced to the bullish side. So I'm highlighting that imbalance. Once you start recognizing these imbalances, you'll realize that they have very specific uses. Sometimes you want price to tap into it, meaning touch the blue area and go higher if it's a bullish fair value gap like you see on your screen. So your expectation will be something like this. And then other times you want to see price trade right through it and treat it as a gap. And then other times you want to see price, like I said, just simply go up and leave it, not even touch it. So we would call a breakaway. So how do you know which is what? So those are things that I get in detail about. If you ever tackle with me on the mentorship, you'll know how to treat fair value gaps in every scenario. So in this specific scenario, I'm giving you one thing. Like, the preference is, if you're going to use this fair value gap to take all-time highs, you're going to want it to exist above the consolidation, not inside of it. But if it exists inside of it, it needs to use it very sensitively. So on this day, I talked about price using the upper half. And shout out David in the chat saying definitely tap into the mentorship. I really wish I could, because there's so much that I would say. I could say so much more about this price action than what I'm saying right now. But what I'm saying right now is still valuable, and I want y'all to take it. But just know that there's more detail to be said that can make you even more precise. But so like you see, the upper half of this is what we'll be looking at if we even go down that far. So price consolidates at first this week before it taps into the upper half. And you can see it's using it so far. But I keep telling everybody to be careful about uptrends that look like this, basically, right? Because what do you notice about this uptrend? Maybe you're seeing it in front of your laptop right now or your phone, but like, yo, this uptrend has no fair value gaps. None of them. You may notice a bearish fair value gap right here. There's a bearish one, but there's no bullish ones. But you got to remember this blue area, and like Molly said in the chat, he said, yo, it's a choppy move. Yo, them choppy moves get destroyed. Them choppy moves do not last long. Oh, y'all don't believe me. Them choppy moves do not last long. What do you think just happened on NASDAQ? What do y'all think just happened on NASDAQ? So this downtrend that just happened where price went like this just now for the past how many days? I've been talking about the nature of this uptrend. So I'm probably the only person in the world, because I'm in a trading world too. I'm looking at what people post. I don't know anybody else who's been calling for this drop earlier than me. I've been calling for this drop for a really long time now, especially throughout the journey of this uptrend on NASDAQ. I'm like, yo, it's coming. The top will be in soon. And then I've been even more specific for people who are new. I've been more specific with calling the exact top here on SPY. I said this in July, right? July of 2024, July 7th. And in a class just like this, I said SPY was going to reject 611.85 and a potential bear market could start after that. I said that back when prices over here somewhere, right? Back in July. So I say that to say, yeah, we've been looking at price coming back down when it comes to this area, but something that helped us realize that it most likely was going to happen was, once again, like, how did I know I was probably going to be right? The way that we were approaching that area. So, and like David said, imagine calling all-time highs before we even get there. Trying to tell y'all, yeah, it's the algorithm that we're trading. So when you learn certain signatures of the algorithm, it could bring you a level of precision that you never even thought was possible. Like, yeah, we could call all-time highs before price ever gets there 7 months ahead of time. And something that helped me feel more confident in my analysis is the movement on the way it is. So here's another takeaway for your notes. It's like, if you have a point of interest, such as a order block or a fair value gap that you like, or I don't do supply and demand. I do not do supply and demand. But if you got it, if price is approaching the supply zone or demand zone or something like that, if it's approaching that area in a choppy manner, like what you see here, or what I was looking at on SPY heading into my rejection at these all-time high, it's very likely it's gonna use your area. So you definitely want to keep looking at the movement into these areas. So yeah, the movement here told me I was probably gonna be right. And then we also talked about SMT divergence happening at these highs. So you know, at the time I brought you guys back to what it looked like in previous all-time highs, which I'm actually to take us back there, because I understand I got new people every week. So even if you've seen this before, I think it's good to revisit it now that we watched it play out, because I talked about this SMT divergence way before it happened. I said it was going to happen. And now we're looking at the aftermath. So I'm about to show us what the last time we had a bear market, what it looked like, and what it looked like now. So I don't know if y'all remember this diagram from my Discord, but I basically, I need the other NASDAQ chart. Give me a second. Let's go here. There we go. All right, so peep this. And I'm going to simultaneously explain what an SMT divergence is, because I know some people don't know what that is. So SMC divergence, smart money technique, SMC divergence means that's when two correlated assets are basically moving in different directions at specific points. So, or they're doing different things at key areas. So for example, you'll notice here that we have all-time highs that get put in on the NASDAQ right there where my yellow line is at. You had all-time highs that got put in on the S&P 500 on the right side, right? What do you notice? What do you notice? Do I have to put a circle around this too for you to notice it? Look, on the NASDAQ, we didn't run the previous all-time highs, but on the S&P 500, we did. And that's literally how the bear market started in 2022 when everybody lost all that money. Yeah, it started with an SMT divergence. So that's something I talked about in one of these classes before it even happened in this current time period. I said, I can see NASDAQ having an SMT divergence where NASDAQ falls short of running all-time highs, while the S&P 500 actually runs it and comes right back down. In other words, a sweep. And that's exactly what happened in this time period, but that's what happened back here as well. And I think being that we trade an algorithm, there's a lot of predictability based on the repeatability. Like this is a lot of things happen, like the same thing happens over and over in the market. So last time we had a big drop, it started with SMT divergence. Same thing with this year. That's what happened so far. I'm not saying we are in a bear market, we'll see, but we've corrected already. which means we're 10% down. So at the end of the day, a major drop has happened. Whether we get to 20% or not, a major drop has happened and taken out trillions of dollars in the stock market. And it started with an SMT divergence. So this is on a daily chart, but you could get SMTs on any time frame. You're gonna watch for those. Also, in this time period, if you notice, picture watching the market during this price leg that I just circled. You would think like the NASDAQ is super bullish. Like, look how many green candles in a row. We just had 4 green candles in a row right next to these previous all-time highs. You think like, oh yeah, nah, NASDAQ about to rocket. And that's exactly what happened back here. Look at today's time period on the NASDAQ. It wasn't as green, but still, you could see we was in a little uptrend. It looked real promising. But at the time, I was like, I still think we're gonna have a repeat of 2022 where NASDAQ gonna fall short, while the S&P 500 actually runs their all-time highs just like they did. And then that's exactly what happened there. So let's also watch. Notice, even after a major drop, nothing moves in one direction. So we have a major drop, yes, but then it pops back up. It retraces before it drops again. And the drop is not as clean as the uptrend is. Why is the drop not as clean as the uptrend? Because the stock market is conditioned to stay high, right? We're not really supposed to be dropping too much. So it's always going to be a retracement leg. Understand this. Bear markets will always be a retracement leg because the market stays up, 70-something% of the time. I think it's like 77%. The market is typically supposed to be up. So anytime we in a bear market, it's going to be a counter trend trade to the higher time frame. Anytime you're trading a counter trend, you're always going to be trading a price leg that is choppy, stubborn. You feel what I'm saying? Because it's a counter trend. And so even with the NASDAQ right now, it's dropping. I think this is slightly eventful up here, but ever since, you can see that it's kind of a choppy drop. The whole drop is choppy so far. And then now we consolidated all last week and everything. So I'm just saying, anytime we move to the downside, it's probably gonna be choppy. Let's look at another time period we move to the downside. This time period right here. Back in I remember calling this out. Anybody who's been with me, we talked about this as well. This whole drop. And then I said, I literally have a screenshot of me saying, yo, when we move back to the upside, it's going to be extremely aggressive because of the nature of the drop. So obviously we're in a bull market prior to. Super strong. I mean, we were in a bull market the whole time. This was a correction as well. But look at the nature of this correction. Look at the downside. Super staggered. And then look, boom. Strong rally. Super strong rally. Boom. We got up out of there, right? Got the heck up out of there. And so anytime it's moving to the downward direction, downside direction, it's usually not going to be straight drops, like, oh, straight line, a whole bunch of bearish fair value gap. It's not going to usually be like that. That's more so for the upside. You're going to have some bearish days. Like, you're going to have some nice days, like these 2 red candles, or like this big red candle, this big red candle, these 2 big red candles before the pop. But I'm telling you, when it moves back to the upside, it's going to be extremely aggressive. And the reason why I said this at that time period, not only are we tapping into a bullish PD rate, as you can see on the monthly time frame. On the monthly time frame, this is a bullish fair value gap. So we tap into a bullish fair value gap on the monthly. And then what do you see simultaneously? Let's see how it reacted. On the daily, you have a very important bearish fair value gap right here, which if we were going to use it, we need to use the lower half. Once we did not use the lower half, automatically I know we start in the uptrend. So no, I don't need a market structure shift to know we're about to go into an uptrend. I just need to understand fair value gaps for real. So my usage and understanding of fair value gaps is telling me like, okay, it's always an if-then statement. If not the lower half of this bearish fair value gap, then I know we're taking these highs. And if we take these highs, I already know we're taking the entire area, because there's no reason to run these highs if we're not actually making a higher high right now in this circumstance, especially coming off of a higher time frame PD rate, such as this monthly Bitsy. All right. And so there you go with that. And then we got the heck up out of there. Mentees, y'all might could see the painting type stuff that's going on in this overall uptrend. and all aspects of it, and then it's taking us more so into current day. But we're not that far from that area, honestly. But yeah, man. So like I said, man, the counter trend is usually not that pretty. Usually not that pretty. So I feel the same way about this downtrend here. It's not that pretty. Now, back to the demonstration, because I definitely left the whole demonstration I was trying to do at them highs up here. There you go. There it go. Okay. Oh, I need to mark it off. My bad. Hold up. This was the fair value gap I told everybody that week. And one of these classes, I don't want to see us come back here. If we come back here, it needs to be the upper half. It's not the upper half, we're dead. It's over. All right, so look. We're using the upper half so far. So I'm like, you know what? That's my emergency bullish spot. Like, if we bullish, it's gonna have to be that. So you want to see what's up, but are you suspect about the uptrend? Yes, you're suspect about the uptrend because, like you guys told me earlier, it was no fair value gaps on the upside. So something else for your notes: if you notice price legs that do not have fair value gaps in those price legs, be very, very careful. I'm trying to tell you, be very careful. So, and when is the move gonna happen? The move will probably happen. The move will probably happen in a high volume time period like the New York session. So you waiting for the drop to happen here. It's not happening. And I know you see this bearish fair value gap, but mentees, we talk about why this fair value gap was probably not going to send price back to the downside if you consider the overall market health, which is a whole nother topic that I'll go in detail about. If y'all tap on me, I can explain more, but I'm low-key talking to my mentees when I say what I'm saying right now. That's why I'm trying to talk to them low-key. Like, you can kind of see why we wouldn't use this fair value gap to take us lower. Price went above it and invalidated it. All right, so now anytime we get to any type of high or low in the market, you need to watch what price is doing next. So at this time right here, I can only like I'm gonna go to, I can't show the 9 o'clock hour yet. Hold on. How do I do this? Let's go this. On the way up, we finally made a bullish fair value gap right here. On the way up. Okay. So it's just very simple. It's like, yo, if we're gonna go higher, it needs to be this blue area or it's nothing. And I know I've talked to you guys about this in the past, but I want to take y'all through this candle by candle. So, you know, the upper half is the expectation. Technically, I'm gonna be real with y'all about the upper half. So we'll be watching for that right now. And then let's get there. Because once 930 comes, we just drop off right away. As soon as the upper half comes, as soon as we lose the upper half, at that point, you can start trading this and using bearish PD rays as a line of defense. So I'm showing you this demonstration again. And hold on, I'll go back to what Kia says. So Kia said there's a very small bullish fair value gap. If you're talking about this one, it already got used. And I know you're probably saying this for other people just in case they're wondering it. But if you meant this one already got used. So it had, by the time we come back to it, it was already mitigated. We're not tripping about this. Yep, yeah, so it already got you. We're not tripping about it. That's why price sliced right through that the second time around. And after that, I would never think that this very small fair value gap here would ever send price back to the upside, especially not in context. Because we already suspect about upside based off the fact that we're even using this in the first place. Why the heck did price use the blue area in the first place? It's already suspect. So watching how it chopped up first, you think I'm surprised to see price come back down? Heck no, I'm not surprised about that. It was already sus in the first place. All right, so I'm gonna erase that. No, we're not gonna use that. Plus, I want you guys to be aware of very, very tiny fair value gaps. Those are typically not reliable. You want to see real imbalances in the market. Yeah, so what does in context mean? In context means we already are suspect about upside based on what I said on the daily chart. On the daily chart, I said the fact that price is even using this blue area is super suspect. All right, so now seeing how we ran the highs, which is like, okay, maybe I could be wrong. We need to maintain bullish sentiment then. Like if I'm wrong, maintain bullish sentiment. Don't give me mixed signals. Don't run these highs and then invalidate the hourly bullish fair value gap right here. Don't do that. You know, because when you do that, it's like, now I really don't believe we bullish. Because if we were bullish, it's an if then statement, right? If we were bullish, this would have happened for a fact. And once again, that comes from deeper understandings of fair value gaps and price delivery. Something I'll say to you guys is this too. This is part of what I was talking about with defense. Don't miss this. Very important. Very, very, very important. Yo, my people, this right here, and no problem, of course. This right here is a deep retracement in context of this price leg, meaning, as I told you guys, if we're going to move higher, it needs to be this area like that. Okay, nothing lower, nothing. If it's going lower, it's gonna run these lows, just like I saw happen in the past couple weeks. You see how far we all the way down here somewhere. All right, so it's already an if then statement. So my point is, the very lowest that we should go, if it's a buy the dip scenario, I'm gonna repeat that. The very lowest we should go if it's a buy the dip scenario is the halfway mark of this bullish fair value gap. That is it. Therefore, let's go back to the hourly. If this is supposed to be the bottom of this whole retracement, right? There's no need to touch the bottom, pop back up so close to these previous all-time highs right here of this price leg, not all-time highs, the previous highs of the price leg, which means you're in a premium. Come back into a deep discount just to go back to the highs. Very unlikely. Some of y'all missed it. I need to explain a couple of things though for you with terminology. Basically, if I were to measure this as a price leg, which is just not how I would even measure it in the first place, so I almost don't want to say this because I don't want to incorrectly say something. But imagine you measured the high of this price leg from over here to the low of this price leg right here, and you looked at the 50% as this yellow line that I'm about to put. That's the 50% of it. There's no need for price to go above 50% all the way up here, come all the way back down here, and then go higher again. There's no need for that. And because I feel like that might sound frustrating to you, I mean, it's confusing to you guys, I'm gonna put it in an even easier term. So I got y'all. Look, think of it like this. Market makers, they want the best entry, right? They don't want you to join their trade. They want to shock the world, okay? They don't want everybody getting the entry that they got. They want the best entries in the market. So if the market maker entry is down here, this is the bottoms right there. That's the bottom. And they get the heck up out of there. They get out of there so hard that they come to near the previous highs. There's very unlikely they're gonna take price all the way back to where they entered at just to go there again. Very unlikely. All right. So, and I need to disclaim something for the people that do understand what I was doing with the fibs. If you're trying to do a dealing range where you're measuring your premium and discount, this is incorrect. The way that I drew it is incorrect. I was doing it for demonstration purposes. I'm saying this as a disclaimer. So yeah, I know what I'm talking about. This is not how you measure premium and discount. This is not the high that I would use. If I was going to do premium discount, I would have been using this high right here with these lows right here. That's it. This singular price leg, and then we invalidated it. That is not correct. Taking this high to this low is not how you do your fibs. But you can still just understand what I'm trying to say conceptually, to where we don't come to the bottom, come back near the highs, come back to the bottom. No. Why would the market makers give you their entry? They're not nice people. They are not nice people. They do not do that. So why is that relevant? Why is that relevant? Because if we were going to go higher in this time period, my people, it would have been based off of this close by PD rate, meaning that's what made this fair value gap so relevant. That's one of the reasons. There's more reasons than that, but one of the reasons I'll share with you is understanding price delivery, understanding that there's no need to come back down here to go higher. Therefore, the only bullish spot I'm looking at is literally right here. That is the only bullish spot I'm looking at. Because if price comes down here somewhere, I know we're bearish for real. Let me get ones in the chat. I need ones in the chat if you follow me. Twos if I lost you. I need it. I need the feedback. I need to know. Cause I know I'm saying a lot. I know I got beginners again. I got people who've been trading longer than me in here. Like, I got everything in between. I'm getting a lot of ones so far though. Okay. Appreciate y'all so far. Appreciate the honesty. Okay, so majority ones, got some twos in the mix, and it's all good. Like 1.5, we got an in-betweener. I appreciate y'all honesty. You know, I'll try to rephrase one thing real quick, but other than that, never forget that this is on recording, so definitely play that part back. All right, and so basically, right, what I'm trying to say, my people, is if you do your top-down analysis, which is, look, I'm on a daily chart right now, and on a daily chart, I established through understanding of fair value gaps that the lowest that price should go if we are bullish is the halfway mark in this blue area. The lowest we should go. Look what happened on the hourly here. We ended up going to the point where I said it is the lowest we should go if we're bullish. We tap into that. This is the market maker entry. If we're bullish, this is where the market makers are getting in, and they never want to take us back there. If they're going to retrace, it's going to be close by retracements. Any retracement is going to be close by. Okay? So you don't want price to come back down here, is what I'm trying to tell you guys today. So the fact that price came back down here, I already knew we was bearish. I'm not buying no dip, quote unquote. This is what we call a failure swing. I'm not buying no dip. It's going to keep going much lower. That's all I was trying to say. So that's what made this fair value gap so important. Because if then statement, if we're bullish, it's going to be that. Specifically the upper half. Specific. Now you see why when price loses this area, you can see why we short this. And all of a sudden, bearish PD rates start working. All of a sudden, you see we reject this bearish fair value gap. Here's something that a lot of people do that's so incorrect that I want to kill this right now. You see, you guys are on the left side of the chart. Look how far I have to go. Look, I have to go all the way to the left side of the chart. And you guys are over here looking for quote unquote order blocks and quote unquote bullish fair value gaps and all that stuff, bro. All of these gaps, notice I said gaps, are gaps, not fair value. They're gaps now. We're going to fill these. It does not match context anymore. So your biggest mistake as a trader when you learn about fair value gaps and order blocks is you keep taking fair value gaps and order blocks and all these other PD rays that exist out of context. Notice what I did first. I understood the destination first. How do you know the destination, bro? I ain't gonna lie, that's a lot. That's a lot. That's a topic in itself. I understood where price is heading to first. After that, I determined what PD rates matter to me. Your biggest mistake as a trader is you look at PD rates first and you use those to give you a direction. You're gonna get killed. Real life, you're gonna get killed doing that. Because you're saying, oh, I learned about fair value gaps. Look, there's a 1 minute fair value gap right here, and there's a 1 minute fair value gap right here, and there's a 1 minute fair value gap right here, and here, and here, and here. And your chart looks disgusting. It looks like a painting that a little kid made. So we got 50,000 things on there. All these irrelevant stuff. Look at price not even tripping about this. It's not even worried about these areas. It's irrelevant now. For a reason, it's out of context. So please stop doing that. Notice what price is rejecting though. Bearish fair value gap. Right there. It rejected a bearish one because it's matching the current price leg in the current context. Feel what I'm saying? So price is respecting these bearish PD rays on the way down. Everything looked good. Right? It was just 10 something. I think we consolidated here for a while or something like that. I'm trying to remember. It's blurry now. But and there's nothing wrong with consolidation. Don't trade consolidation. Trade once we break consolidation. Because much like this, look, rejecting bearish PD rate, rejecting bearish PD rates, dropping, everything looked good. This is what a true downtrend looks like. We're not even invalidating previous highs or anything. Everything is great, valid. Okay, then you come across some consolidation. I'm gonna erase the blue area. Let's erase that. You come across some consolidation. Okay, my bad. When we lose this consolidation, it's imperative that, hold up, let me go to another time frame, show you something. See something. There we go. All right, you want to lose it with a fair value gap. You see on the 5-minute, there's a bearish fair value gap right here that we ended up rejecting to continue the downtrend. Why is that important? And notice I had to go to the 5-minute for that. I'm gonna explain that right now. So once you peep chop come into the market, and here's how you peep chop come into the market. Let me show you. I have so much I'm gonna say. Oh, let me back up. Let's go ahead. Because everything is running smooth, right? This looks very, very beautiful, easy hold. Everything is great until price starts chopping, and this chop lasts from, let's say, like 10:30 to like 12:07. So let's just call it a little over an hour and a half of straight chop, and you might have blew your account inside of the chop. How could a person recognize the chop in this time? Well, if you understand, yes, you guessed it. If you understand fair value gaps for real, it'll help you recognize chop very early. So what do I mean? Yo, you see this fair value gap right here? The lower half is extremely important in this context. Someone out there right now is starting to come to some conclusions. They're like, yo, so I guess when price is bullish, Bagtorell is trying to say that we want price to hold the upper half of fair value gaps. And when price is bearish, we want price to hold the lower half of fair value gaps. And I just want to correct you. I just want to correct you and say, no, that's not always the case. We don't always want it to hold the lower half because it's bearish. Sometimes price is bearish and I want it to hold the upper half. I'm just making that clear right now. There are very specific reasons why I'm saying lower versus upper. It's just somewhat coincidental that in this scenario, it's a bearish one and I do want it to hold the lower half. Just making that clear so you don't get the wrong idea. I'm gonna continue what I say after I read this comment. It says, question, you said the fair value gaps on the far left don't matter because they're out of context. However, what if the fair value gaps on the left are observed from a higher time frame like the weekly? What a phenomenal question. I love that question so much. Best question I ever got. I love that question. Let me see, because I don't want to lose my, I probably won't lose my spot. Just a 1 minute or whatever. Okay. It's like 10:40 something now. Look. What a phenomenal question. Look. The first thing you do, and this is why I do top downs. First thing you do when you get to a chart is you start at the highest time frame. I literally was going over this last week with mentees, like reiterating, because they know this already, but I wanted to reiterate this. Start with the highest time frame first, which should be the monthly. The monthly at this time, before it looked like how it looks right now, was not that telling, right? You can see we've been in the uptrend. It's getting kind of choppy, getting wicky. Price is slowing down. Cool. Move down. Next time frame, weekly. At this moment, the weekly is just chop. You feel me? So yeah, you have an inkling that maybe the chop will end eventually, but there's no real, confirmation. You feel what I'm saying? Now, it's a great question. I'm still going to answer it because other people had that same question. So I got you right now. The daily. When I get to the daily, I'm like, oh, I could determine direction from the daily. I could get some direction from it. This is easy now. Like, okay, if I'm looking at the daily time frame, what I understand about the daily time frame is the daily is in chop. And what I know about consolidation, aka chop, is that if we want to leave consolidation, we want to leave with a fair value gap, preferably on the outside of it. Oh, there's no fair value gap on the outside of the chop. That's sus. But there's one right under it. So you know what? Here's what I could do. I'll do this. If price could hold the upper half, I still believe in it. But I know if we lose the upper half, I know we bearish for real. So that's something else I'm saying at the time. So once again, the daily I'm getting direction from. 4 hour, let's go to the hourly like we was looking at. And so because we had already touched this area, right? I'm like, okay, I don't want price back down here. This is the market maker entry. Any type of bullishness needs to be off of this blue area. Okay, so I'm only bullish literally if we could hold the upper half of this blue area. Notice that I went from the higher time frame down right now. Once we lose that area, I know that the next destination for price is running these lows. And if we run these lows, let's back up. If we run those lows, what is that simultaneously doing? Come on, y'all. Everybody at home, say it to yourself. Running these lows is simultaneously losing the 50% of that daily fair value gap, which we already established. If we could lose a 50% of that, the NASDAQ is going to come and run these lows. Minimum, big minimum, like huge minimum. You feel me? So off the rip, I'm already knowing like, oh, now we about to have a major drop in the market. Something I've been very vocal about. I update the chat every day. So nobody in my community should be caught off guard when this happened, by the way. Because we already seen it coming a mile away. But my point is, so once we lost the upper half of this blue, because of the top-down analysis that we did, automatically you see everything on the left side over here is noise. Everything here is noise. Put an X to it is noise. I don't care about none of that stuff. I already know where we're going. I'm only focused on bearish PD arrays. Where a bearish PD array is going to exist? On my current price leg. I'm only focused on bearish PD arrays on my current price leg. I don't care about nothing on the left side. So the reason why I know to ignore things over here and know it's noise and don't focus on these quote unquote order blocks and fair value gaps over here is because the top, I got direction from the higher time frame first, and it led me to knowing what PD rates to pay attention to. Now, ones and twos in the chat if y'all understand what I said. Even remotely, even if it helps sign click, can I get ones and twos, please? That's such an important concept. Like, y'all don't even, that's why I love that question, because it is literally a game changer type of concept. Real life. Real life. I appreciate the responses in the chat so far. All right, now I know, appreciate you, Akini. So like, I know like people in here like don't understand all my terminology because I got some new people in here. I talk to y'all, you know, people hit me in my DMs and stuff. Some people in here have never touched a trade before. So it's some, please don't join the chat, y'all. I know I'm about to lose my train of thought. Based on that, hold up, let me turn that off real quick. There we go. Okay, my bad. So I know I got new people and stuff, and you might feel a little overwhelmed with the terminology and stuff, but I always say, like, definitely don't run away from the information just because it might be new to you. It's new, which should be good. That's a breath of fresh air, because if you're not where you want to be as a trader yet, it's good news to know that there's information you don't have yet. That's great. Imagine you knew everything about trading and you still wasn't generating profitability. That's scary. Then it's like, well, damn, like I might as well just not do this. Well, I know everything, I still can't, you know. And I'm not talking about discipline, because discipline is just a whole different concept. I'm talking about understanding the chart for real. Imagine you understood everything about a chart and it never went your way. You thought price is going here, it goes there. You thought this bounce would happen, it rejected. You thought price was gonna trade through this, it bounced on it. You like, bro, I don't know nothing about these charts. But no, there's things about a chart that you guys don't know yet, and that's a good thing. Don't run from that. Run to it. Run to it. So I know certain vocabulary I'm using might go over some people's head in here. Stick with me. Some classes I go way more basic and I try to explain everything out. Other classes I gotta just keep talking. But tap in with us every week. Tap in with it's free classes. Just tap in every week. You're gonna start picking things up. It's just like when you go to another country and you got a language that you never learned before. You start picking up on little things, like you be like, oh, they say agua every time they talk about water. Like, okay, so agua is water. You start putting two together. So just stick with me. Stick with me. Don't run from it. Run to it. It's a lot that could really benefit you in what I'm talking about. Trust and believe. Destiny said, this is my first live Zoom, but I've watched your other videos to have a little understanding. I appreciate you. I appreciate you tapping in, Destiny. Real life. So, okay. With that being said, my people, yeah, yo, we not looking at it over here because we got direction. So now we were looking at this consolidation. Now let's look into it. Let's look into it, my people. Oh yeah, how do we recognize defense in the market? Word, that's what we was getting at. Okay. You see this bearish fair value gap right here, people. We would have used a lower half in this context. It would have been lower half. Once it did get used, guess what? You really should see price pop up above these highs immediately. It eventually did, yes, I get that. But it had a retracement I wouldn't have liked personally. I wouldn't have liked this retracement first. So that retracement is suspect, but all right, it goes above those highs. All right, I would expected to make a deeper retracement. My fault. What I mean by deeper retracement is, because we're dropping so far, right? So what I mean is, once we came above these highs, I wouldn't want it to just stop. I would want it to keep going if we are in trend, because that is the typical expectation in trend based on this scenario. Okay, notice that this is the previous lows. So if this is a sweep, y'all missing it, man. If this is a sweep, yeah, we need to get up out of there right now, like, and respect bullish PD raise and disrespect bearish PD raise. Disrespect bearish PD raise while simultaneously respecting bullish one. All right, we disrespected the bearish one. All right, a bit of a choppy start. Boom, bullish fair value gap is lit. Oh, this is gonna start the uptrend. Let me put replay so y'all know where I'm at. Look, this is gonna start a major retracing in the market if we're bullish. Was I bullish at the time? Heck no. I like to weigh both sides though, because even I could get it wrong. Everybody get it wrong sometimes. So I always entertain both sides of the market when I say what I say. I'm thinking in my head at this time, what is a bullish person thinking? What is a bearish person thinking? And I'm weighing the cases. At this time here, I'm like, yo, a bullish person would absolutely love the upper half of this bullish fair value gap to hold. Definitely don't trade through the whole thing, especially, but the expectation here is a bullish person would love to see this. That is what a real bullish price like would start off like. So let's see what they thinking at this moment when it happens. Let's see what happens. That's sus. How we just invalidated this? Wait, so we still bearish or something? See, for me, I already know we about to chop. Off the rip, I know chop is coming to the market right now. Let me tell y'all why. I already said it, but let me reiterate why. This fair value gap right here, I told you, if we were bearish, you would have used the lower half of that. Did it play out? Did it play out? No, right? No, I think we all can see it didn't play out. Okay, so bearish people they just blew their account. Bearish people just blew their account. They full ported right there, they blew their account. But it's cool because the bullish people are still in the works. Bullish people need this to work. They need it to work. Bullish people took buys right here and price traded through. Guess what? The bullish people just blew their account too. I don't even know what to say no more. Everybody done blew their money. Everybody's broke. Party done. It's over, ain't it? It's over. No, I'm telling you, man, both people got wiped out the market. What does that tell you? No one wins when the family feuds. That's what I always say. Ain't nobody winning. Bullish people losing, bearish people losing, everybody a loser. We're all losers here, people. Nah, on the real though, what that tells me is, oh, the market's about to go into a period of consolidation, because I understand what bearish delivery look like and I understand what bullish delivery look like. So if I don't see either one, it's over with. Chop is about to ensue. And then so when you see price disrespecting PD raise on both sides repeatedly, you already know what's up. Everybody's still, this is what people are doing at this moment. Let me show you. Let me show y'all something. Let's go like right here, right? This is what people are doing. And I hate this. It annoys the heck out of me. People be like this, yo, there's a bearish fair value gap right here. Yo, I'm about to short this. If price come back to this bearish fair value gap, I'm going short. We going back to lows. I'm like, yo, you ain't even recognize that price is not moving right now. So you still think this bearish fair value gap has relevance, and it's not relevant no more. PD arrays, look, traded through. Oh my gosh, yo. I hate fair value gaps. Fair value gaps don't work. No, you don't know how to work them. I just word to everything, bro, on my threads just now, son. On my threads just now, I put out a fair value gap thread, and I said something like, I forgot how I worded it, but I said something today about not every fair value gap is relevant. Most of them are irrelevant. And I teach people how to know which ones are relevant, basically, right? Somebody in my comment is going to say, fair value gaps are crap. I just chuckle at stuff like that. It's like, dang, that's a person who learned incorrectly. That sucks. Like, that sucks. You know what I'm saying? To learn incorrectly, now you think it's a bad strategy. Meanwhile, it's the best strategy in the market. You just don't know how to work it. You feel what I'm saying? And like, that's like me getting into a luxury car that got no gas in it. I'll be like, this cars don't work. Driving is stupid. You can't drive. Driving doesn't work. No, put the gas in the car, bro. That's how I feel when people say things like that. You just doing it wrong, bro. Doing it wrong. Put gas in the freaking car. So like that's how I feel with this. Like this for Vega. You trying to short this, and I already know this is nonsense. Everything here is noise. You see this bullish fair value right here too? Let me highlight this. Guess what it is? You guessed it. Noise. You see this bullish fair value, the tiny one right there? Noise. The bullish one right here, let's put it there. Noise. You guessed it. Everything is noise, bro. Everything is noise until we break consolidation. So let's go back to the current price action. Let's look at last week. Let's look at last week. You see this hourly time frame? Did any of these fair value gaps work on the hourly? Anybody who traded last week, you might have been trading fair value gaps, order blocks, all these things. They all failed you. They all failed you. You know? So I'm trying to tell you, fair value gaps, nah, for real, fair value gaps, and order blocks and chart patterns and candlestick patterns and EMAs and MACD crosses and all this other nonsense crap that's out there are irrelevant when price is manipulated in a range, because the point of a range is that price is not aiming to go anywhere. You're using trending tools in non-trending price action. Like, come on. Trending tools and non-trending price action. Think about what you're doing. Think about what you're doing, man. It's not the tools that's the issue. It's what you're using the tools on. Fair values are beautiful in price trends and order blocks and everything. And then you're going to have, of course, you're going to have like little instances where it works. So you need to be like, see, Rel said that these things don't work in chop. I just made $3,000 off of a bearish fair value gap in chop. And I'm like, congratulations, do it again tomorrow. And the next day and the next day. We're talking about what's highly repeatable. I've made plenty of money in chop. We all have. But those are what we call bad wins. All right. I've taken very accurate, super precise plays in chop. This fair value gaps, fire rejection, boom, boom, boom. I'm talking about what is going to happen on a consistent basis. You trade chop long enough, I don't care what strategy you trade, it's gonna destroy you. Are you net positive on chop? Are you net positive on chop for your entire trading career is a better question to ask yourself. I don't care if you was positive last week or on Thursday. If you look at all the chop days, put them together in your trading career, are you net positive? I personally am not net positive on chop days. And I know everything about these candles. I don't know anybody who knows more about these candles than me. Real life, nobody excluded. And I'm not net positive on chop because chop is manipulated price action to stay in a range. So everything you think you see, fair value gaps, order blocks, MACD crosses, this, that, and the third, they're not going to have real follow through because there is no follow through in manipulated ranges. Chop is an op for a fact. For a fact. So what your goal as a trader or your objective as a trader is to identify chop early before you have massive drawdown. Something I'm already sharing with y'all in this class, how to identify it early, and then know how to trade outside of the chop, because once we leave chop, it gets real pretty. Right? Look. Once we leave chop, it gets really pretty. To the downside, you get a lot of very nice moves until we chop again. So, and that's on all time frames. Even the time frame we was working with, like, well, I didn't press play yet, but it ends up, dropping off pretty decently. So I say that to say it's like, stay out of that nonsense, because you're here trying to overanalyze chop and you feel like, oh my gosh, maybe I just don't understand this stuff like I thought I did. And it's like, it's not even necessarily that. It's just that you're applying your knowledge in incorrect areas. I don't look at any of these fair value gaps as, matter of fact, they are fair value gaps. Let's really correct that statement. These are definitely fair value gaps. They're just not fair value gaps that you want to use for bounces or rejections. They are gaps. They are gaps, people. That's why they get filled in here. They're gaps. They're just gaps. Bearish fair value gap right here. It was super irrelevant, wasn't it? Look at this. Price didn't even trip on this bearish fair value gap. Blew right through it. I'm telling you, it's just nonsense. So this is where people get killed. Look at this one. You telling me this is not a nice looking fair value right here? Let me know. I'm about to draw it for y'all. This don't look beautiful. Ain't that a gorgeous fair value gap? How many people, do you know how many people shorted this fair value gap in real life and got obliterated? I'm trying to tell y'all, bro. Stop it. Stop trading chop. What are you like? What are you doing? Y'all not hearing me for real though, so it's all good. Let me see. I know I missed something in the chat. One more question. Due to the fact that your mentorship is limited, do you recommend that people on the sidelines purchase your SMC bundle to gain a better understanding? Speaking of the bundle, I have 1 through 4. Are there any more? Now, there's no more bundles than the one I had put out on that website. I think that website is, that bundle is good for like super starter pack, but like it doesn't really get to the heart of what I'm gonna cover in the mentorship, because like, for example, in that bundle, what I have there is a couple classes on like market structure, and then I transition into order blocks, and I talk about some risk management in there as well. But like in my mentorship, you guys will realize that I don't trade market structure, you know? So you may say like, so why do you give it to people as a foundation? Because it's exactly what it is, a foundation. Like I got people that come to my mentorship that are complete beginners. And so I always think to myself, like, cause I don't want to leave anybody behind. I'm like, what would I want a beginner to know heading into my mentorship? And it's like, well, let me not even say that. What would I want a beginner to know heading into trading? I think everybody should at least understand breaker structure, change of character, externally and internally, not just the basic way that people think. People think they know market structure, but they really don't. They really don't. That's why, in the most respectful way, majority of y'all failed my market structure quiz that I gave the free community, because people think they know it, but they really don't. Y'all failed that quiz pretty badly. That's a separate conversation. But I'm just saying, I don't trade market structure because I'm able to man, look at this. People. Yeah, really not understand. Y'all not really hear me for real. Oh, I got bearish on the stock market. Even though I was already projecting it, but forget the projection. I knew we was bearish up here. So bearish that I knew we was gonna come all the way down here. Did I need a market structure shift to determine that? And don't even try to say I said this in hindsight. Everything is on recording. Everything's in everything there. People who've been with me know we've been talking about all this stuff since up here, bro. I don't need market structure for that. Market structure is very slow, it's outdated, and it lacks certain details. You can understand what the market is going to do next without needing to see a change of character or a break of structure. It's very outdated, and it lacks understanding about true market objectives. So that's my little market structure rant to say, like, don't get me wrong, I think you should learn it first, but you should definitely graduate from it. So if we're talking like mentorship material, in my mentorship, market structure is the first class because I got to cover that for beginners. But I after that, we move on. We just move on. Like, we not, you know what I'm saying? We move on from that. Now that we got that foundation, some of you guys never traded before, cool. Now let's move on and graduate to the next topic. You feel what I'm saying? So that's why I always suggest mentorship, because everything I want to talk about it, everything that I want to go in detail about is in that mentorship. It's not, it's just so much. It's just so much. It's in the mentorship. So, but yeah. So that's that answer. What else did I miss? Y'all funny in here though. Where G chops out. The mentorship is worth it for real if you're serious about trading. I appreciate you saying that, David. Yeah, definitely if you're serious about trading. Literally, I was talking to somebody earlier. Shout out her. She got a lot going on in life right now. And I was telling her, like, yo, don't do the mentorship right now. I literally told her that we came to an agreement that it's probably not best for her to do it right now because she got a lot going on. And I don't think it's best to do my mentorship unless you're really ready to dial in. Like, it's like a college course. You feel what I'm saying? So definitely don't, like, it's for people who's ready to lock in for real, because it's really like doing college right now. So if you got a lot going on, please don't even join it, and just tap into the free stuff as much as you can. Maybe join it when I do it again in, like, I don't know, maybe October or something like that, whenever the next one is. Steph said, guarantee your trading will thank you for joining the mentorship. I appreciate you. We rolling deep tonight. What's up? Nah, you ain't missed too much. Do you cover footprints in the mentorship? What do you mean by footprints? If you're talking about footprints as in like level 2 data and stuff, I don't do any of that stuff. Let me know if that's what you mean by footprints though. Like if you're talking about like those things are spoofed to me. Those things are manipulated to me. If you're talking about like where are the orders in the market, like there's massive order put in at 698 on SPY or something like that. Those things are manipulated to me, and like I don't even no, I don't. No, I don't do that stuff if that's what you mean at all. People that trade with that stuff have not shown the position that I've shown, and I don't need any of that. I need these exact candles right here, you know? Yeah, like I don't read the tape or nothing like that. Nah, bro, I don't do that either. Right? Like notice that all the precision I've shown over these weeks and stuff is with naked charts, and I'm trying to tell y'all don't need nothing but it's like simple understandings about very specific things. No extra, nothing, bro. Nothing. I promise y'all. Promise y'all. But yeah, so far we've definitely, yeah, I agree, bro. It's not worth it, and they're manipulated. Why would they not manipulate that stuff? Just think about it. Come on, like, it ain't gonna be that easy. But yeah, so okay, we finally, no, you definitely need that extra stuff. You already know. We finally leave the consolidation, people, and every time I leave some type of consolidation, these are the previous lows. I want to see fair value gaps around that consolidation. So seeing that we left a 5-minute one, I would highlight it and notice, like I said, this fair value gap here is under the consolidation versus inside of it. So I don't really want the price coming to this one. I want price to come to the one below it. Something I was talking about from the daily time frame. Notice that price is fractal, right? Notice that price is fractal. What happens on one time frame happens on the other. So look at the type of play you're getting off of that 5-minute fair value gap right there. The one under the consolidation. There you go. I mean, this dropped from 934 to this is already 100 points. You know, like already off of one little play and counting. You know, so that's that. That is that. So hopefully you guys at least got some value out of like defense, learning how to stay at a chop. And I feel like that's so relevant. I feel like that's so relevant based on the week we just had here on the NASDAQ. Like y'all seen what the week looked like recently on the NAS. Oh my gosh, right? It was terrible this week. Let me show you the hourly to put in perspective. You see what's going on, super choppy. Once you recognize it, stay out of that, you know? You say, yeah, that's my issue. I think I'm a decent traditional trader and I would love to be 100% focused on SMC, but my career is a hindrance at this point. Completely understand that, bro. And I'm telling you, if you ever get in a space where you had time to like dedicate to it, definitely tap in at any point. Cause like, I wouldn't say so much, you feel what I'm saying? But I also wouldn't even want somebody to join it and be like, I can't make it to class. I can't make the class. I can't watch the recording. I can't do the homeworks. I can't complete this test. I can't come to the live trades, you know, because then I'll be like, yo, you're missing all the, you know, sound like nah, just tap in when you're ready. Plus I feed off of everybody energy. Like people in my mentorship are very passionate. Not that you're not passionate, by the way. I know you're passionate, but I mean is they're able to be here to show the passion. I mean, they're in the space in life where they could pull up to class and stuff and show it. But if somebody is like not in the space in life, because we all got real life going on, so I don't judge nobody. It be people got jobs, people got kids, people got stresses, people got you know how it go. I don't judge nobody. I just say, yo, pull back up. I'ma always be here. I love to teach this stuff. I love this stuff. And mind you, when it comes to SMC, as you mentioned SMC, I do want people to know, like, yes, my main strategy at SMC, but I have my own discoveries within price action. One of my main strategies, the BT floor, is not something that you'll ever find anywhere online because it's derived from my mind. It's coming from my own brain. But BT4 is everything we do in the mentorship. So it's not just like, don't think you could just go on YouTube and just like, I'm just regurgitating YouTube. Don't ever get it twisted. Don't ever get it twisted. It's not just YouTube. I got my own discoveries in here. But my foundation is SMC though, for surely. All right. You funny kid. But yes, I can't wait as well. I can't wait as well. So I hope you guys in this demonstration at least got a lot on defense and trading chop and all of that. So you guys know to stay out of it and you don't have to blow your accounts in here no more. Like that's a major goal of mine, to get you guys to recognize bad price action earlier than most people could and know how to stay out of it. And guess what? Guess who's not perfect at that? Me. I can recognize it. I'm really good at recognizing it before most people see it. Am I perfect at staying out of it? No. And guess who still is working on discipline? Me. So I'm always transparent with my mentees and telling everybody like, hey, I may know what to do. That don't mean I'm always gonna choose the right thing to do. So like even last week, I recognized last week was gonna be some nonsense super early. And then I put out my weekly projection for you guys on Monday night. Well, I told my mentees Monday night. For the free community, I told y'all Tuesday morning. My projection this past week was this. I said, as long as 4-hour bodies can hold this fair value gap, I'm bearish on the NASDAQ. And I said the maximum, the big maximum, is the lower half of the 4-hour fair value gap above it. And what have we been holding? This area. We've been stuck here. So one thing I understand is like, yo, if this area is not immediately delivering us to new lows, meaning if it's not doing that immediately and we coming back, I'm like, oh, I already know what they about to do this week. So when I noticed that, I was like, yeah, they about to stay right here this week. I already know. You feel what I'm saying? The next time price is gonna get really eventful is probably under these lows. Anything in between here, you subject to chop. So yes, I know that. I know that since price is like over here, something like that. I know that. But did I stay out of it? No. I still traded in here. Had mixed results. Some good, some bad. You feel what I'm saying? So I am not, when it comes to discipline, I'm working on it just like anybody else. I'm not perfect. I'm just trying, I can only come up here and teach you guys the right way to do things. And it's up to me and it's up to you both to follow the right way to do things when it comes to this trading stuff. You feel what I'm saying? Now, here on the 4-hour, like I said, this is what price has done so far. You can see how the body's really been respecting the 50% here until Friday. We finally closed above it, but the body's respecting 50% there was telling to me. And you just see what's kind of going on. We've been holding this area, but once again, I know I'm speaking ahead of time a little bit because I didn't want to cover NASDAQ just yet, but my sentiment on NASDAQ is the same. And even somebody hit me up about it earlier, asking me like, yo, Rel, like, are you starting to be bullish? Like Friday was kind of a bullish day in the market. And I had told that person like, nah, honestly, I'm still bearish on NASDAQ until the charts tell me not to be bearish on it. I don't care about news. I don't care about economic events or fundamentals or any of that other stuff. I care about the charts because the charts are the most reliable thing to me. You know what my bro told me when I told him that we about to have a huge drop in the market up here? You know what he told me? He said, yo, Rel, there's nothing bearish in the world right now. Unemployment looks great. You know, Trump's got the market sky high right now. Why would the market drop right now? There's nothing bearish in the air. And I told him verbatim, I said, bro, the market is gonna drop when there's nothing bearish in the air. By the time everybody realizes it's bearish, they're gonna either chop you up or rally. When did the news reports start reporting on the major drop in the market? This past week. That's when you really started seeing people talk about it. My mom's talking about it. My group chat's talking about it. These people don't trade. This week, what did this week look like? Come on. What does this week look like? They killed both sides. If you was bullish, you got killed. You was bearish, you got killed. That's when people start to talk about it, when the drop already happened. You gotta see this via the candles. The candles told me a drop was gonna happen many moons ago, but especially in here. So we ride this down. We made a lot of money on the way down, you know, when nobody's talking about it. And all of a sudden, when price is down here, all of a sudden everybody, oh, tariffs and whatever other excuses they use for it. So that's why I tell you, the most reliable thing to me will forever be these candles, understanding what these candles is going to do. And then after that, you know, not even after that, that's it. I rely strictly on these candles because they're the most reliable thing. So once again, until price comes above the 50% of this 4-hour fair value gap, I'm still bearish. And if it does come above it, I'm going to watch this area closely. Here I am covering NASDAQ early. It is what it is. I'm gonna watch this area closely, this weekly bearish fair value gap. But I think that the next destination for NASDAQ is 18,390. And I think it's gonna go lower than that. But I'm just talking about, let's make quick objectives, quick low-hanging fruit objectives. I think 18,390 here on NASDAQ is next. You know what I mean? How do we get there? The ways that I described. It could either be these current fair value gaps, and the last place I will watch for that is this fair value gap right here on the weekly chart, from the weekly chart. After that, I might just be bullish on NASDAQ. I'll update y'all though, because there is one more spot I'm low-key looking at a little bit. And the reason why I would entertain a deeper retracement than that, Let me show you. The reason I'm entertaining retracement like that is just because price could come back into a premium before the next drop. So if I were to draw my Fibonacci from the high to the low, price could come back right into this area here before dropping. Something that happens. I see though. I need to know, how do we get there, right? What is the nature of the rally? Was it choppy? Because then I might anticipate a drop again. Or was it strong? Is it respecting bullish PD rate? Is it, so that's something I'll let y'all know in the moment. But for now, my sentiment remains the same on what I expect to happen in the market. I really think we get a potentially drop off of anywhere under the 50% of the tops, the middle CB, anywhere under the 50% of the middle CB. I think we could drop off to 18,390 at any moment. Ignore the chop. Don't trade the chop. Trade above and below the chop. Above and below the chop is where I would trade. And then last place I would look at is this area in here. All right, so that's NASDAQ. Thoughts on a weekly fair value gap we created on ES. Let's check it out. So now I got the future charts. You say weekly fair value gap? Are you talking about like the bearish one right here? Or actually SIBI. Okay, the SIBI, heard you. So about this one right here. Same spot that NASDAQ has it. Let's look at NASDAQ. Same spot. So it's something I'll look at. But for ES, I want to see if we can continue to reject this SIBI that we've been rejecting here on the 4 hour. And true, since you're a mentee, you may notice painting as well in this area. So I'm watching this SIBI still. We've been rejecting it. I'm still looking to see what's up with that on ES. And then I'm going out of order though. So y'all heard my take on NASDAQ and ES. Let's take a pause. Let's get the chart debate done. And then we'll get back to what's going to happen in the future, not just on futures, but what's going to happen in the future. All right, so let's take a pause. Let's do the chart debate right quick, and let's see what y'all been talking about here in this chart debate. So in the chart debate, my people, where's that? Yo, you know what's crazy? Because of daylight saving time, I was wondering my alert went off late. I was like 7:30. No wonder, because okay, my fault. I gotta change that. Anyways, I'm thinking out loud. Where is that, bro? What did the free community say today about the chart debate? All right, so wow. So I put out 2 pictures for y'all because people always complaining, oh my god, I can't see the time frame. You don't even need the time frame, but whatever. I was like, let me make it easier for y'all for 1 week. Then I'm gonna get back to being evil. So I gave y'all the weekly. You don't even need this, but whatever. I gave y'all the weekly, showed you what the weekly looked like. And then I gave you the daily here. And I said, which arrow is going to play out? Arrow 1, arrow 2, or arrow 3? Which one is going to play out? And it looks like arrow 2 is the most popular answer by far, which is so interesting to me. Like, I don't even know why everybody's picking arrow 2. But I don't know. Let's go see what the mentees are talking about. Let's see if they agree with you. Free community and the mentees really got beef at this point. Like, yeah, they got beef. So let's see if this week we can like hold hands and be on the same team or something like that. All right. 30 mentees answered and all 30 picked arrow 2. So this is the first time in a long time where the free community and the mentees collectively agreed on the answer right here. So true said, I don't know if chart debates are getting easy or if we getting good as mentees. My answer is you guys are getting good because I know my mentees on a personal level. I remember how you guys used to get these things wrong prior to the mentorship. Y'all would get them wrong. Now that y'all in the mentorship, y'all getting these right every single week. So, you know what I mean? So let's see. No cap, David. I feel you on that, brother. But it's all good. So look. Do we think it's arrow 2? Oh my gosh. I want to reveal the answer, but I feel like anybody want to hear about my life story? Or y'all just want the answer? Y'all want to hear my life story? So once upon a time I was born, right? And like, you know, I had these cute ears and stuff. Like, okay, y'all want the answer? Like, this is what I'm talking about, man. Y'all so impatient. People are just so impatient these days. You can't just. What do you guys like to do? Write in the chat what you like to do for fun, and like we could. That's all right. All right. Ready to talk about show the picture. Y'all found. Nah. Nah, on the real, what you call it? What am I what year was I born? I was born in 1995, the best year ever. Heard it here first. Yeah, y'all found. All right, let me show you the answer before people actually. I'm gonna start a mob in here. The answer, my people. Well, Zoom is in the way. I'm trying to move it. The answer is I'm gonna start a mob. It's Arrow 2. Shout out everybody. Man, tease, free people. Y'all really did y'all thing. I'm proud of y'all, man. It was Arrow 2. It's Arrow 2. I'm proud of y'all for real, man. Everybody did a good job. And for people who did get it wrong, it's all right, man. You're gonna get them next week. Don't even trip. It's trading. If you can't be wrong in trading, you in the wrong field. You in the wrong field. Chill out, Ashcat. Y'all fell. All right. 95 the best year, man. August 11th, 1995. You heard it here first. That's what we stuck the mental shit. Y'all funny. Y'all funny in here, but definitely. Yeah, Kia, we gonna get it right, Kia. We definitely gonna get it right. You already know, come on. 95, you know the vibe. So yeah, yo. Shout out to people that got that right. Let's get on to the next section of class now. And shout out to people that tried. Forget the people that got it right. Shout out to the people that even tried. I'm just glad y'all trying. That's all I care about for it. I got the same birthday as your pops. That's a son. Your pops is a good man. You was a college freshman in 1998. You making me feel mad young, brother. Yeah. But yeah, man. So yeah, all the mentees got that right. So shout out to mentees. Y'all on a crazy winning streak right now. Yo, next week, I'm gonna just tell you right now. Next week's chart debate, I'm gonna stump the group. You heard it here first. Everybody gonna get stumped, mentees included. You heard it here first. Next week, I'm coming different, real talk. I can't. Y'all making me look soft. Like what's up? It's almost rude now. Just be gaining right all the time. It's like, am I soft or something? Like y'all think y'all so good. Like y'all think y'all so good at this stuff now. Like, all right, watch. I got y'all. I got something for you. So boom. 7 line chart to is coming. I swear it. I ain't see that, true. It's like we got something for her. We got something for her. Don't even worry. Don't even worry. Oh wow, taxi sale is crazy. All right, look. Anytime we want to talk about what's going to happen in the upcoming week, we need to know what the weather report is. Why? Because it's not good to trade every day. It's good to trade on days that are high probability. So we like to look at the news reports or the news events that's expected to happen. And that's because even though we know where price should go, you want to know when it's gonna go. When it's gonna go is based on the news. Where it's gonna go is based on the candles. The news is the when, the candles is the where. Let's get into it. Monday, retail sales, pretty decently important. Nothing OD crazy, but especially in times where there's recessionary fears, retail sales have more relevance. Cool. And you know, right now with all the tariffs and stuff going on, we want to know how people's pockets is feeling. Even though effects of tariffs might not be immediate, they're going to be tracking things like retail sales over upcoming months. All right, cool. Tuesday, ain't really talk about. Tuesday is going to be low probability, most likely. Wednesday is FOMC. My boy JP. True snitching out here, huh? Cash, I got something for you after this, Cash. Don't even worry. But anyway, so yo, JP Jerome Powell is talking on Wednesday, people. Please be careful. Please be careful. And typically at 2:30 is when he gets on there to the podium. I suggest if you're gonna take a trade while he's talking, you take trades after 3 o'clock. Typically, that first half hour of him talking is a lot of back and forth chop. Typically, all right. So you want to be careful. Usually, if they're gonna make a move, heavy on the word if. If they're gonna make a move, it'll be probably after 3 o'clock, meaning the last hour of the market. I live in New York, so I'm speaking on New York Times, not the New York Times. Hold up, check my rhymes. Oh shoot, don't get me started. Hold on. A lot of y'all don't know. Like the bars go crazy. All right, so boom, that's Wednesday, Thursday, and there's nothing really to talk about. And then Friday is not really talk about. It'll probably be a follow through of whatever Wednesday's giving us. So Thursday and Friday will probably be follow through. All right, so pay for mentorship, stay for the bars, indubitably. Long as you know. Long as you know. All right, so DXY, I broke down to you guys how this fair value gap, we knew was high probability. I changed my mind when we came above this wick, knowing that I was being eager. Like, I needed this fair value gap to work, but when we came back above it, I was like, oh, it's probably not going to work. And then I had to correct myself when it actually worked. And this is the aftermath. So, geez. Good analysis. I doubted myself on this day. That's on me. It ended up still playing out. And we've been consolidating ever since down here, though. And so I still think DXY has more downside. I would almost bet money on it that it got more downside. I would be very, very extremely surprised if DXY bottomed out right here. I'm gonna be real with y'all. This weekly BISI open is, I'm very convinced that it's gonna go there. Anybody could get it wrong. Let me put that disclaimer out, but I really do think it's gonna go here minimum, big minimum. And let me show you what that looks like on a chart. So see, since we really got bearish on DXY, over here, right here is where we got bearish on it. And I told you about the little mishap right here. And then I said, if we lose, let me circle it for you. If we lose the circle, I got DXY coming to this weekly fair value gap right here. Or minimum, actually I got it wrong, my fault. Minimum is the monthly. My bad. I thought this yellow line was right here, my fault, y'all. So actually the minimum target got hit. Our minimum target got hit. What is the minimum target? The monthly fair value gap. That's my bad. So take back what I said before. The minimum target is the monthly fair value gap. So technically there's a chance it could bounce right here. I think it'll drop further into the weekly one. Let me show you the weekly chart. You see the weekly fair value gap down here? It starts right there. It starts at the yellow line. I'll draw it though, look. You see this drawing? I think that we may head into the blue area. I really do. But based off the fact that we tapped into a monthly one just now, there is a chance it could bounce. So what does that mean for you as a trader? You need to watch PD arrays closely. If we're still respecting bearish ones, then we're probably gonna hold bearish. If we start disrespecting bearish ones, you could see a retracement coming. I really feel like we're gonna drop lower though. I do, but I'm just letting y'all know. I could only give you the things to look at. We're in a bullish fair value gap on the monthly chart, and the bullish fair value gap on the weekly chart doesn't start until we come to 102.292. I feel like we want to come here though. I'm gonna be real with y'all. I don't think we done dropping, but we'll see. All we did last week was consolidate, so there's no information here. This fair value gap on the 4 hours is important to me. I'm pretty much bearish under this. All right, so for people who watch DXY, I'm bearish under this. This 4 hour fair value gap here. Wednesday at 7, March 5th at 7 o'clock. Anything under that, I like price coming into this yellow line, the weekly BISI open. I like price coming in. Anything under that. All right. Yep, exactly. All right, yeah, that's exactly how I feel about it. All right, let's move on. Let's move on. With that being said, Euro, I think it's coming to the weekly Civi up here. I don't think we made this journey for no reason. I got the weekly Civi as the next destination. I believe in all bullish PD rays into that. I think we'll pop to that side. I wouldn't want to see price invalidate this 4 hour BISI right here. Now I know that's a way away. I don't think it's necessarily gonna come down there, but if it did, I would want to see it respected. And I think it's coming into the weekly Civi above. And so yeah, weekly Civi above right there. That's the next destination for Euro. It's been a pretty nice journey, a nice pop out of this monthly BISI that we had drawn. Monthly BISI popping out. This is like a sweep. Look at this, people. A sweep of these lows into a higher time frame PD array. Sometimes you gotta pop out and show. You know what I'm saying? Yeah, look good. I think we going higher and even higher for real, but the low hanging fruit objective is the weekly Civi. So I remain bullish on Euro and I remain bearish on DXY. And British pound, same thing. You see this weekly Civi up here? I think it's going for that next. I would want to see it respect the the weekly BISI, which is a bullish fair value gap. I want to see respect that. You got a daily bullish fair value gap here as well. I'm not really trying to see necessarily come back down there, but if it does, I like to see that respected again, even though it already got tapped into. I want to see it still respected to go higher into that area. I think it's only what, 2 more Forex, and now I'll move on from Forex. Yeah, the Kendrick, I can't help but bring up the Kendrick. Shout out K Dot. Yeah, man, look at it. We just been consolidating over here on CAD, but I think it'll end up dropping back down. I think this week we should see these lows on the daily and under it for real. I think this week, especially with FMC being here, I think we'll see under these lows. I don't necessarily see it coming back above these wicks. We'll see though. But I'm bearish on this ticker. There's no setup here for me though, right? Look at the chop and stuff. There's no tradable setup for me. I just think directionally it's gonna go back down. And USD CHF here. Don't want to see this weekly SIB disrespected. I want to see us respect the lower half of it. Lower half of this should take us lower past this wick. All right, so if we tap into this, I would like to see price short the lower half of this if we're gonna move down here, which I do believe we're gonna move down into there. All right, so US dollar, Swiss franc, that's my take there. Let's look at the coin, man. That coin, let's go to crypto. All right, so yeah, on March 2nd, there was some really bullish news that came out on crypto, and Bitcoin went up like 10% in a day. Something crazy. Hey, it was going crazy, and then we came to this very class, and I said, yeah, it came right into our bearish PD rate that I think is gonna work. And ever since then, yeah, we made new lows off of that. But the thing is, we didn't actually destroy those lows. So what we did was we came and we like swept it for real, and then we consolidated. All right, so what's next for Bitcoin after that? Who also remembers on that same class, I said, this is a very valid daily bearish PD array. This is a very valid weekly bullish PD array. So in those type of scenarios, that's what causes chop. That's what causes ping pong. You're playing ping pong between the bullish one and the bearish one. You see what's going on there? All right. So when you see price consolidating here on Bitcoin, nobody should be surprised, because on that very day, March 2nd, where my circle is at, I said that there's a chance we could bounce right back and forth between these PD arrays. Nobody should be surprised about this back and forth that's going on Bitcoin. What do I think will happen though? Like I said on March 2nd, I said I think that the bearish one is going to win the battle, but we'll see. But I think the bearish one will win the battle. So now, so far, we're rejecting this bearish fair value gap right here. Lower half, bodies is holding the lower half. And we'll see what happens. I'm not too pressed about it, because to me, we're in somewhat of a consolidation. So just like I told y'all earlier, I take PD arrays with a grain of salt inside of consolidation. So I wouldn't be surprised to see Bitcoin come back above here and still find its way back to the downside eventually. I just put, it's, you know, I take it with a grain of salt. For me, I'm interested in Bitcoin under 76.5. Under 76.5, I'm interested in it. And above the blue area, so above 95 for real is where I get interested again. Anything in between is pretty much noise to me. But my prediction, yes, my prediction is still to the downside for now. All right. Nothing else on crypto will I go over. And we already covered, we almost done, y'all. We already covered NASDAQ and S&P. Let's go to the Dow. The Dow played out beautifully. We talked about these rejections. 4-hour SIBI, gorgeous. 4-hour SIBI, gorgeous. I told you I stay out of chop, right? Let's look at this for something to learn from. You see this chop? This is literally how I feel about NASDAQ right now. As long as we hold in the area, man, y'all missing it, bro. As long as we hold in the area, it's hard for me to, I don't lose my sentiment until price tells me to. So even on this day, it looked pretty bullish, right? But guess what? We still held the area, and then you see what happened after that. So that's how I feel about NASDAQ, by the way, as a side note. But this was my analysis when we talked about it in class. I said, as long as the Dow could hold this, I'm still bearish on Dow. I literally said I want to see Dow hold the lower half. As long as Dow could hold the lower half, I'm very bearish on the Dow Jones still. And you see it held the lower half If you're new here, when I say lower half, I'm looking at the bodies, not the wicks. If you're new here, we look at the bodies, not the wicks. So yeah, bodies definitely held lower half, and you've seen what transpired. So heading into the Dow, do I think we're done dropping? No. I like Dow running these lows this week or in the intermediate term. Yeah, and I think we're gonna make a bearish fair value gap potentially on the weekly chart right around here, right around this area. All right, that's what I think is gonna happen on the Dow, but we'll see. We will see. And we got to the September lows, my people. Everybody, round of applause. Yay, we made it to September lows. We've been calling for September lows on the Russell for a little minute now. We finally got to September lows, ran it, and then we've been consolidating. We ran these lows as well, and we've been consolidating. You see the higher time frame for a second. Yeah, I think I got more downside. I do think price is going to basically come into this monthly BISI, which is a monthly bullish fair value gap. So you see on the monthly chart, everybody look at the monthly, right? We look at the monthly. If you zoom in right here, there is a bullish fair value gap right here that has never been touched. I think that the Russell is making its way into that area. So I think there's more downside coming on the Russell into that area. All right, I'm going to believe in daily bearish PD rays into that area. CL, which is oil. Hey, target hit. Remember this circle? We call this rejection into these lows. Blue rejection. That blue, yeah, blue rejection into these lows played out. Got there. Perfect too. Look how we perfectly hit that target. Perfectly. Beautiful. Okay, are we done? What a great question. Are we done? Let's analyze this together. This is noise. This is chop. I hate the follow through. Man, I almost don't even want to chart this because we're at a crucial point. Like, okay, this area is important for bounces. Clearly, we've been bouncing it a million times. But I also understand that we're not really going higher either. We're rejecting up here as well. So we're in an overall consolidation is my point. The movement into these lows is too staggered for me to believe that we're going to continue lower. If the energy into these lows was more fair value gap filled, you know, then I would say, okay, I think it might want to move even lower. But the look at the nature of the drop. Let me go to the daily. Look at the nature of this drop. I told y'all, when price moves like that, it's just so hard for me to believe in it. I can see a pop. So that's how I feel about CL right now. Now, do I think it's ready to make that potential pop? Not necessarily. I have a feeling CL is going to trade back to the downside before it even thinks about going back to the upside. Is there a setup for that though? Do I have a setup for that? No. You can, if you want to, watch this fair value gap for rejection. But I'm gonna be real, I'm not a fan of it. So to me, if you're an oil trader, I don't like this setup on oil right now. Like there's nothing on oil right now that's telling me like, yo, this the one. Like, nah, I stay away from it. I'm gonna be real with y'all. The play played out. We talked about this rejection and we even talked about this rejection on the 4 hour. If y'all remember, we talked about this as well. They both did what they had to do to get us to our destination. Now that we got there, we've been consolidating. I'll leave it alone until it really give us, you know, some real confirmation. So let's actually just, here's what the price alerts will be. My price alerts on CL will exist under these lows. I'm gonna put a price alert there right now, a little bit under these lows, so I can watch what price looks like into that, and then I'll see if we head back down here, are we respecting the PD raise around my price alert? Because then I would take it much lower. Or if we sweep yellow and come back up, I could play the upside. That's one price alert. The other price alert on CL will come. To me, that same fair value gap that I drew, I think if we invalidate that, CL could be on its way to a very nice journey to the upside. So the next price alert for me would probably exist a little bit above that fair value gap. So I could once again look at the nature into that. Like, are we, you know, what's the nature into that? Are we respecting bullish fair value gaps and everything, bullish PD raise altogether into that area? This in-between zone right here, after we hit an objective, let's be clear, we met an objective. So this in-between area is typically where people destroy their accounts. I'll wait for prices to get clear before I have a bullish and bearish plan for both. All right. And then we almost done. Yeah. Gold, I think gold sees its way to 3,039. If it's gonna do that on a daily chart here, I want to see it respect the upper half of this daily bullish fair value gap. I want to see it respect the upper half and then head to 3,039, and then I'll see if it can get to 3103.9. All right. Yeah, like I said, upper half, and that coincides with this 4-hour bullish fair value gap as well. So I would love if gold could tap in here because I think it'll turn around in the upper half and head up to this area. So that's my gold analysis there. Ignore the Nikkei for now. QQQ and SPY, nothing that I need to say that I haven't said about NASDAQ. Same vibes that I said about NASDAQ, to be honest with you, on QQQ and SPY. All right. But just never forget, man. They laughed. They laughed at me when I said price will reject here and make a big drop. They laughed. Where are they now? Yo, if you're watching this on YouTube, subscribe to the channel, like the video. In the description box, there's still spots open for my mentorship, so definitely tap in with me. And then on top of that, if you just want to join the free community and get these free gems, daily updates, chart debates, conversation with like-minded traders and all of that, tap in with us. The link is in the description right now. My Instagram is there, everything. Holla at me, man. And with that being said, my people, that is all she wrote.